Hello students, welcome to my channel. Please do not forget to like and subscribe my channel. As you know all, the partnership account is going on. So today we are going to do the topic admission of a new partner. When the firm needs some additional capital or managerial help, or it wants to expand its business, then it can enter a new partner. It can be done only with the consent of all the existing partners. That means when all the other partners or the existing partners agree, the partnership firm can admit a new partner. In that case, it happens only in the case when they need additional capital, they need some additional managerial help, or it wants to expand the business. So with the admission of the partner, the new business partner in the partnership firm, but with the admission of a new partner, we can say the partnership firm is reconstituted. That means it's all the previous agreements are null and void, and new agreement is entered into, which gives a new partner some rights also. What type of rights he gets? He gets a right to share the assets of the firm. He can use the assets of the firm for firm's business. He will also get a right to share the profits of the firm. That means he'll be entitled to get the share of profit or the losses of the firms. So what happens when a new partner comes? When the new partner brings an agreed amount of capital either in cash or in kind. That means when a new partner enters the business, he has to invest some money. That amount is agreed by by all of them's mutual agreement. He has to bring the capital either in cash or in kind. If the firm is an established firm, that means the firm is well known, it is having a great business, it is having a good reputation, it is earning more profits. In that case, the new partner has to give some extra amount known as premium or goodwill. So when the firm is having a good reputation, the coming partner has to give some extra amount with the capital amount. That extra amount is known as a premium or goodwill. So what will be its treatment in the books, that we'll do in the coming videos. Now the main points of adjustments in the final accounts. When a new partner is admitted, there are the main 6 adjustments that we have to do. These are the calculation of new profit sharing ratio, the calculation of the sacrificing ratio, the valuation and adjustment of goodwill, that means its treatment. Number 4 is revaluation of assets and reassessment of liabilities, and then distribution of accumulated profits, the profits which were already there in the reserves, and then adjustment of partners capital. All these 6 points, all these 6 adjustments we'll be doing in the coming videos. So in this video we are just doing the calculation of new profit sharing ratio. So how it is done, let us see. The calculation of new profit sharing ratio: when a new partner is admitted, when the new partner comes, he takes his share of profit also. So that means when he's coming, definitely he gets a right to get a share of profit. This share is given to him is a sacrifice of a part of profit from the previous partners. That means the previous partners, definitely they'll be sacrificing some part of their profit or some share of their profit. So that that is how he gets his share of profit. How much will be sacrificed by them is done by mutual agreement. That means how much they will forgo. Like for example, if there is a firm having 2 partners, they were having the profit sharing, they were having a profit of we can say on an average 12,000 per year. So earlier they were 2 partners, they were sharing the profit equally, they'll be getting 6,000 each. They enter a new partner, again sharing the profits equally. If they are 12,000 and divided by 3, they'll be getting 4,000 each. So definitely the previous 2 partners, they will have to earlier they were getting 6,000, now they are getting 4,000. So 2,000 will be their sacrifice if they enter a new partner. So this is, we can say it is an adjustment that they will make with the coming partner. So there are different types of we can say chances or circumstances where the new profit sharing ratio is calculated. So we'll get them clear with the coming examples. Like in this example number 1, A and B are the partners sharing the profit in the ratio 3:2. C is admitted as a new partner with 1/5 share of profit. Now calculate the new profit sharing ratio of A, B and C. Here C is coming with 1/5 share. So we'll be saying C's share is 1/5. So the remaining part will be, the remaining share will be, we can say 1 is the total share and the 1 minus this C's share, that means 4/5 is the remaining share of the profit. Now A's new share will be 3/5. We are here assuming that they are we can say they are dividing the previous share in the uh, previous profit sharing ratio. So 3/5 share of 4/5, that is total share. 3/5 into 4/5 is comes out to be 12/25, and B's new share is a 2/5 of 4/5, that is the remaining part of the profit. So 2/5 of 4/5, 8/25. Now new profit sharing ratio, will be equalizing the denominators. Now A, B and C, A gets 12/25, B gets 8/25 and C gets 1/5 into 5. So we have to make it to 25. So 5 multiplied by 5 by numerator and denominator, we'll get 5/25. So their due profit sharing ratio will be 12:8:5. So that will be their new profit sharing ratio. It is the first case when we calculate the new profit sharing ratio. Let us see the second one case. Yes, here X and Y are the partners with the ratio 3:2. Z, new partner, is entered with the share 1/5, which he gets equally from X and Y. So calculate the new profit sharing ratio. Now Z's new share is 1/5, which he gets equally from X and Y. That means 1/2 of 1/5, total share of X is, of Z is 1/5, which he will get equally, means he get half of 1/5 from X and half of 1/5 from Y. So how he will get half of 1/5? That means 1/2 into 1/5, it comes out to be 1/10. That means he'll get 1/10 share from X and 1/10 from Y. Now X's share, X's previous share was 3/5, as we can say 3 plus 2. So his previous share was 3/5 minus he will give 1/10 to the coming Z, that means 5/10. So X share will be 5/10 and Y's share 2/5 minus 1/10, which he will be sacrificing. So it comes out to be 3/10. Now X, Y and Z, here X's share is 5/10, Y's share is 3/10 and Z's comes out to be 1/5. If we will equalize the denominator, it comes out to be 2/10. So now the new profit sharing ratio will be 5:3:2. So it is the another case. Now take the third case. R and S are the partners with ratio 3:2. T, a new partner, enters for 3/10 share. He takes 2/10 share from R and 1/10 from S. Now calculate the new profit sharing ratio. T's share 3/10. So R's new share, his previous share was 3/5 minus which 2/10 he is giving to T. So the next is his share comes out to be 4/10 and S's new share 2/5 was his previous share minus he'll give 1/10 to T. So his share will be 3/10. Now new ratio will be R 4/10, S 3/10 and T 3/10. So ratio will be 4:3:3. This was the third case. Now the fourth case where we will be calculating. The fourth case is Raman, Gagan are the partners with profit sharing ratio 3:2. Suresh enters as a new partner. Raman surrenders 1/4 of his share Gagan surrenders one third of his share in favor of Suresh. Now calculate the new profit sharing ratio. Raman's old share is 3 by 5. He surrendered one fourth of his share. That means one fourth of 3 by 5. One fourth into 3 by 5. That means 3 by 20. So he surrenders, he gives out this share. Now Raman's new share will be old share minus what he gives out. Old share minus what he gives out. His new share comes out as 9 by 20. Now Gagan's old share was 2 by 5. He surrenders one third of his share. Matlab he gives one third of his share. So one third of 2 by 5, that comes out to be 2 by 15. So Gagan's new share is 2 by 5 minus what he gives up. That means 4 by 50. So Suresh's new share. The shares, now Suresh, the coming partner, how his share will come? Share given by Raman plus share given by Gagan. So shares given by Raman was 3 by 20 plus share given by Gagan was 2 by 15. Add both of them. Equalize the denominator by taking the LCM. So it comes out to be 17 by 60. Now we equalize all of their shares, Raman, Gagan and Suresh. Now Suresh's share is 7 by 60. His share came out to be 9 by 20. 9 by 20 and Gagan's share was 4 by 15. Equalize all of them by having LCM. We can say their share will be 27 ratio 16 ratio 17. How? Like they were having the denominator 60. So it will be their 20 minus into 3 comes out to be 60. So 9 into again 3 comes out to be 27. And here 15 into 4 comes out to be 60. So 4 into 4 comes out to be 16. So the new profit sharing ratio will be 27 is to 16 is to 70. The last one option is example number 5. Here Rita and Sita are the partners with ratio 4 ratio 1. They admitted Lakshmi a new partner for 1/4 share of profit which he acquired wholly from Rita. Now calculate the new profit sharing ratio. Lakshmi's share is 1 by 4. Now Rita's new share, she will get 1 by 4 from Rita. So Rita's new share will be 4 by 5 minus 1 by 4 comes out to be 11 by 20. Sita's share already is 1 by 5. So new profit sharing ratio will be Rita, Sita and Lakshmi. Rita is 1 by 20. So equalize all the denominators. Sita's share was 1 by 5. 1 by 5 into we have to equalize the denominator. So 5 into 4 20, 1 into 4 4 by 20. And similarly Lakshmi's share was 1 by 4. So equalize the denominator, it comes out to be 5 by 20. So therefore the new profit sharing ratio will be 11 is to 4 is to 5. So these were all the circumstances we can say where we can we can calculate the new profit sharing ratio. I hope you will understand this topic very thoroughly and definitely will like and subscribe my channel. Thank you.